Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. It's an interesting real estate market right now with low supply, fairly low demand, high interest rates, and a lot of uneasiness. How much do you think real estate prices can change, and how quickly? That's something referred to as volatility. And today we'll explore volatility in lots of different markets from one of the smartest macro guys I know on the Real Estate Guys radio program. As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There's a lot to watch in the markets today. One of the big messages, of course, is that interest rates continue to be stubbornly high. Earlier this week, the Fed indicated that, well, they might not be so quick to lower rates. They want to just make sure that inflation is in check, and it really isn't. So it's fascinating to watch the markets go from an expectation of a couple of decreases in the rest of the year to now we might get one or none or maybe even an increase. So what does that mean to real estate investors? Well, that's what we're going to talk about today. And our guest started listening to this podcast more than 10 years ago. He'll tell you the story of how that happened. And although he's a big macro thinker with a really popular channel, at his heart, he's a real estate guy, so we'll hear about his real estate investing in both the US and Colombia, and you'll get some lessons about what it takes to invest offshore if you're interested. But our primary discussion is going to revolve around this concept of volatility. That is, how much prices can change over time. And to most investors, the more volatility, the more risk. The more volatility, the more hesitation. Add to that the fact that we see the stock market continuing to bump against all-time highs, gold passing another high this week, Bitcoin hitting a high and then low and then close to the high and then low and then close to the high. Kind of makes you happy to be a real estate investor. But the only constant is change, and not only are the markets kind of difficult to navigate right now, but it's an election year. So in a lot of ways, all bets are off, which is exactly why you got to get around super smart people. And you'll meet one of them today. When we come back, our friend George Gammon is back on the Real Estate Guys radio program.
Hey everybody, Tom Ziegler here. You're listening to the Real Estate Guys with the one and only Robert Helms. This is where you go for wisdom, and as Dad would say, the checkup from the neck up to get rid of the hardening of the attitude so that you can make a difference in the lives of other people. So glad you're here.
Welcome back to the Real Estate Guys radio program, now in our 28th year of broadcast. We love talking about real estate, but you got to step back and look at the bigger picture, which is why we like to hang around smart guys that know macroeconomics. Today, back on the show, our good friend George Gammon. Hey, George.
Hey, Robert. Thanks for having me back, buddy.
Absolutely. It's always great to have you on the program because you bring a unique perspective. You spend a lot of time looking at macro stuff, but you're a real estate investor. And George, folks that even watch your channel don't hear that much about your experience. Take us back to when you saw the opportunity in real estate and got involved in things like flipping houses.
Yeah, I retired in 2012. And I didn't know anything about real estate, nothing about investing. I didn't know what the Fed was. I didn't know what the yield curve was. Absolutely zero. But I knew that I didn't want to delegate the responsibility of my financial future to someone else. So I took the bull by the horns. I started studying. I dove into Milton Friedman and Thomas Sowell, and I started researching guys like Schiff and Jim Rogers and Doug Casey, Rick Rule, Jim Grant. And I just became fascinated with economics and macro and kind of this investing model and really Austrian economics as well. And I looked around and I said, okay, well, Jim Rogers has a philosophy. And right now, and he still is my favorite investor. And he's got this bizarre concept called buy low and sell high. I don't know if you've heard of that, Robert, but it's actually a pretty good idea.
I remember that from Jim. Yeah.
Yeah. So I'm like, okay, well, I want to buy stuff when it's cheap and I want to sell it when it's expensive. So what around me is cheap right now? Sure enough, in 2012, that turned out to be housing. So I pretty much went all in. And I was just very fortunate to, at the time, be dating a gal in Kansas City. Well, she lived in New York. She was a model in New York, and I was in Vegas, but her family lived in Kansas City. So I would fly her in to KC, and I would fly up to KC. We'd meet, hang out for a while. Anyway, we're out with her family, which they're fantastic people. And she's got two brothers and her father, and they're in the construction business. They did windows and siding. So we were out having a few beers and they said, you know what, you can buy these houses at tax foreclosure auctions for like $5,000. I'm like, oh, okay, what's the catch?
Right.
Because I knew enough about the free market to know that if it was worth $100,000, there'd be people there bidding up the price. So I kind of figured out what the catch was, that you couldn't go inside. I mean, this was like a former drug house and you know what these properties typically look like.
Yeah.
But I said, all right, if you guys do the work as far as all the rehab stuff, I'll put up the money to buy the property and I'll put up all the money for the rehab and we'll just kind of split it. We'll do a partnership. And they said, fantastic. So that was the very first entry I had into the real estate business or the real estate market. And that was in August of 2012. We went down to the local tax auction, and in Jackson County, Missouri, they do it once a year. And it's literally on the courthouse steps.
Yep.
Just like you see on TV. What was funny about that time, and this tells you when a good time is to buy and sell, there were maybe 10 people there, Robert, bidding against me.
Wow.
And you fast forward to, let's say, 2017, and there was like 500 people there.
Yep.
Bidding. Exact same amount of homes, maybe even fewer homes. And so back then it was just fish in the barrel. And in hindsight, we say, well, that was a no-brainer. But no. Back in 2012, I mean, my family and everyone around me that I was telling about real estate or talking to them about my investment decisions, they were telling me that I was out of my mind.
Yeah.
They said, what, don't you know that everyone loses money if they invest in real estate? We had this thing, I don't know if you've heard about it, called the GFC. And housing prices have gone down since 2009. They're going to continue to go down forever. You've got to understand that real estate is the worst thing you could possibly be doing with your money. And you always know that when you're hearing that from your friends and family members, that's the right time to buy.
Yep.
So anyway, the first day we bought 6 houses. The rest is history. I said, wow, this is an easy business. I just get these renters in here. They pay me all this money. What's not to like? So I kept buying homes. And then I started selling in 2018. And I sold the last house in the portfolio in 2022.
All right. Well, that's more backstory than we've had before from you. And of course, then you actually have done much of the same in Colombia.
Yeah.
So maybe start from the point of view of investing outside of the United States, cutting your teeth, figuring out language barrier, all that stuff.
So there's a lot of downside, but because there's so much downside, that means there's a lot of upside for those people who have an edge. And let's take Colombia, a great example. I came here in 2014 at the time because oil was cheap. And I didn't know how to play oil, but I knew that the Colombian peso is loosely tied to the price because it's their number one export. So I thought, well, maybe I can buy something denominated in Colombian pesos. And the only thing I knew about was real estate. So I'm like, okay, well, I'll just buy a property. I'll remodel it. I'll force that appreciation. I'll cash flow it. And then if I do make money on the currency appreciating due to the price of oil going up, then it'll be kind of a double whammy. And if I get it wrong, then I've got this built-in hedge with the forced appreciation and the cash flow that I'm getting.
Yep.
And then if the property appreciates in real terms, well, that's just icing on the cake. So that was my initial idea for coming into Colombia. And the more time I spent here, the more I enjoyed it. But what happened is we just had this massive tourism boom. Since, when I first came down here, I would rarely see a gringo. And now, my goodness gracious, where I live, all my employees call it Gringolandia. That's a true story. In fact, I read a statistic the other day that over 100,000 expats now live in just Medellin, let alone Colombia. And that's a town of 4 million people, about the size of Phoenix.
Yeah.
So the opportunities have been fantastic. But what I had to do is I had to do a lot of boots on the ground research, because there is no MLS. There's no centralized way to buy or sell properties. That people literally sell properties here by putting a for sale sign up in the window. I'm not kidding. That's how it's mostly done. And so if you're someone down here that's speaking English, I mean, you're just going to get completely ripped off. And then the subcontractors or the GC or whoever you have doing the work, I mean, that's going to be a complete disaster. I can assure you of that.
Yeah.
And so you've got to have some local expertise, and you have to go in and do the homework to know what the comps are and to know what these properties are actually trading for. Not what they say they're trading for on some sort of English speaking website.
Yep.
But what they're actually trading for, Colombian to Colombian, on what we call per square meter down here. It's, per square foot in the United States, just a different way of measuring pretty much the exact same thing, just the comp. And so once I figured that out, and that took me probably 6 months, then I brought in a team from Ecuador that I'd used before, a husband and wife team, for my architect and my designer. Now here, the architect is basically the same thing as a GC back in the United States. But I had to get in a team of people that A, spoke the language, and B, that I could trust. And even then, we had to go through countless subcontractors to get to a team that we could actually depend on. And what most gringos do is they come down, they buy the first thing they see of an English-speaking website from a real estate agent that speaks English, and they think they're getting a good deal because they compare the price down here per square foot to what they might get in Miami. But what they don't realize is they're paying double the price they should be paying. And then they come in, they say, well, I've remodeled my bathroom back home in South Carolina. Therefore, I have the expertise to go ahead and redo a whole entire property here in Medellin.
Right.
And keep in mind, it's all concrete construction down here. It's not drywall. It's not the typical building materials that we have back in the United States. And what happens, they get this contractor, they'll come in, lowball them a price, and then once they get them hooked and they pay them a down payment, then the price will change. So they'll say, oh yeah, we can do that for $15,000. They agree to it, and then a week in, 2 weeks in, after they've done all the demo, and they start, well, actually, it's going to be 25. And then, when they're neck deep in it, oh, well, actually, it's going to be 35. And then when they get done, the gringo brings in someone who actually knows what they're doing, and they say, no, this is a terrible job. They point out the electrical problems. They point out the plumbing problems. They point out the problems with the lights. I mean, I could tell you some horror stories that would blow your mind. One thing as an example, when the first property we did here, I told the guy to come in and replace the glass on these floor to ceiling sliding glass doors that I had on the top of this penthouse that I purchased. And these things were like probably 15 feet high. I mean, massive, massive sliding glass doors. And so after they were installed, I came in just to check the work, and I noticed that something just didn't feel right. Like the doors felt flimsy, and it just dawned on me. I'm like, wait a minute, like this is like safety glass, right? Like glass that should be in a home window.
Yeah. And
it goes through the translator through Joaquin, my architect, and the guy says, oh no. Oh, he says, you didn't say that you wanted that. I'm like, well, what kind of glass is this? Is like normal glass? I'm like, yeah, it's just like glass. So if my dog walked through this, it would shatter,
right,
and there'd be these massive pieces of glass that would literally cut my dog in half.
Oh, man.
And he's like, oh, yeah, sure. And like, there's no film protection. There's nothing, zero.
Oh, wow.
And so most Americans would never even dream that they would actually have to ask specifically for safety glass or some type of glass that was appropriate for a home. But that's the learning curve down here in Colombia. So that just goes to show you there are so many pitfalls. And that's why the gringos, 90% of them lose money. But if you're part of that 10% where you have that local expertise, now all of a sudden you can use that to your advantage, because it is true, because of the lack of MLS and the lack of information. If you do know the comps, you can, what I call, buy $1 for 50 cents. because there's no liquidity. So if someone has to sell their property, you can pretty much name your price if you have the cash, and you can get it at a massive discount.
Well, love that. And in fact, you did so much of that you decided to put together a little TV show about it down in Medellin. Tell us about that.
Yeah, well, this was late 2018, and I was watching all of these HG TV shows back in the States.
Sure.
And they're incredibly popular. And basically all they did is just follow people around as they're remodeling properties. And I thought, well, I'm remodeling properties right here in Medellin. So if it's that popular in the United States, why wouldn't it be popular here? Now, keep in mind, I didn't speak Spanish, and I've never produced a TV show in my entire life. I've never been in one. I've never produced one. I've literally zero experience. So that being said, I went down to the local TV station, and I somehow got a meeting with the executives, with some of the decision makers, kind of the middlemen. And I pitched them on why they should let me do a TV show, be in the show, and produce it myself, and why they should give me an 8 o'clock time slot on Sunday evening, prime time. And they, of course, you can imagine, they were being very polite, but they looked at me like I was just absolutely out of my mind. And I think just to appease me, they said, okay, why don't you come back in a couple weeks and just do like a demo reel? Maybe like a 5-minute presentation on kind of what your idea is, and we'll go from there. And so I said, okay. So I went out and I hired editors. I hired a camera crew. I did a storyboard. I watched literally thousands of hours of reality TV because I wanted to reverse engineer it to try to figure out how are they setting up the shot, how they're editing, how many cameras they used, and all these things, because there is a science behind it.
Yep.
And I figured it out. I wrote the little storyline that we used, and I brought in Angie Joaquin. We went ahead and shot it. We barely got it done in time. It sounds like it'd be easy to shoot 5 minutes, but it's actually incredibly difficult.
Yeah.
And then we took it into the TV station, sat down in the conference room, played it on the TV. After it was done, I look at the executives and I say, okay, well, the original plan was you're going to get back to me in maybe a month or so. And they said, no, we don't need to do that. And I'm thinking, okay, it was either really good or really bad.
Right.
And they said, that was fantastic. We absolutely love it. You definitely exceeded our expectations by a mile. And if you can do 13 episodes, let's do a deal.
Yeah.
So we went ahead and did it. Each episode got a lot better, as you can imagine. But they were very similar to what you would see in the United States. We had a lot of fun. It was hugely popular. And after the show ended, we were going to take a break before we did season 2. And that's when I started the YouTube channel. And the YouTube channel just took off to such a degree that it really didn't make sense for me to go back and do the TV show.
Yep. And of course, the early days of the YouTube channel, the whiteboard videos, which you have been known for, where you break things down, often into 3 easy steps. Talk about that part. You had been learning. You were a student, as you admitted. You didn't know anything about the Fed or the curve or any of that. But now that you're learning, you're also teaching, and you had the production crew.
Yeah. So just to be clear, I almost flunked out of high school. And I've never taken a finance class. I've never taken an econ class. I've never taken a business class, for that matter. And that didn't seem to impact me too negatively. So,
Yeah.
but I just loved macroeconomics. I mean, it became a passion. It became almost an obsession. And this was between 2012 and 2019 when I started the channel. So while I was out there managing all these real estate projects, I would be listening to podcasts like yours and like Hartman's, and then like Schiff, and just any YouTube videos that I could watch with Jim Rogers or any of the guys that we mentioned before. I was just absolutely fascinated. So I was consuming as much content as I possibly could, just trying to figure out how this stuff worked. And then in 2019, when we first started the YouTube channel, I thought, well, no one would want to watch a video on macro, so I'll just do a couple videos on real estate. But deep down, the macro stuff is what I really wanted to talk about. So then I did a couple videos on, I forgot what it was, but it was something outside of the real estate topic. And those were the videos that actually did really well. So I thought, well, this is a win-win because I can talk about the stuff that I'd really like to talk about. And that's what people seem to want to watch. So at the beginning, I was talking about very basic stuff, but I'd put it up there on a whiteboard. And actually, a funny story is a lot of people assume the whiteboard was like some sort of in-depth strategy.
Right.
That is the complete opposite. What happened is I was trying to do videos just like talking into the camera, like we're doing right now. And I would just stumble over my words so badly, and I'd forget what I wanted to talk about. I'd have a bullet point of a script that I wanted to discuss, and I'd forget what step 3 was. And I'm like, look, this is going nowhere. Let me just put a whiteboard behind me, and I'll write everything up on the whiteboard just to remind me of what to say into the camera. It was completely a mental crutch. And it turned out to be a very useful educational tool for the viewer, in addition to just giving me the ability to think through what I wanted to say in advance and then follow along without having to read it right off a piece of paper.
Well, and of course, the brilliance of that is that it's part of your gift to be able to explain things in a way that the average person can understand, because you were that average person who learned to understand it. And now when you put it on the board, it makes it that much more succinct.
Yes. And I would also say it's been a huge advantage because although there's a lot of people that understand the monetary system, let's say, or how banking works, or how FX markets operate, or something like that, I would argue there's not that many people that may understand it to the degree to which I do because they haven't had to teach it. So it's one thing to sit there and pontificate on the Fed's balance sheet when you're talking on CNBC. It's a whole other ballgame to where you have to put it up on a whiteboard and explain each step of the process as far as the financial plumbing, the mechanics that are at play, and do that knowing that potentially millions of people are going to be watching that and critiquing it in the comments. That takes it to a whole nother level of understanding that I've been able to build on. And I think that's given me a big advantage to understanding the system as well as I understand it now.
Well, and that also is instant feedback. You do a lot of lives where you'll go live and you'll have people there and they'll comment and it'll be interactive. And that takes a real level of understanding. And the thing I appreciate about you, George, is if you get it wrong, you'll say, I got it wrong. Or you'll say, I used to think this, and as I thought through it more. You're not trying to be right. You're trying to understand and then help other people to understand.
Yeah, and I think another lesson there is in order to grow, you've got to get outside of your comfort zone. And you also have to be honest about what your strengths and your weaknesses are.
Yeah.
So when I first started doing these interviews, like on the Real Estate Guys or going on Fox Business or whatever it was, I wasn't comfortable with my ability to communicate my thoughts. And that's really something that I wanted to work on. So that's one of the main reasons I started doing live streams, Robert, is because I thought, all right, well, I've got to do it. I get one take. There's going to be thousands of people watching me. There is no editing. So it's going to force me to communicate better. And just, you get the repetition, you get the reps in. And I'm by no means perfect. I still struggle with it, but I'm a lot better than I was, let's just say, a couple of years ago. And that's exclusively a result of me doing something that was very, very uncomfortable and what most people probably wouldn't do.
That is a great life lesson right there. Our guest today is George Gammon, the Rebel Capitalist. We'll get back to picking George's brain shortly, but first it's time to play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from July 19th to the 22nd in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. There's all kinds of opportunity in Belize when it comes to real estate, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in the top tourist market, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me July 19th to 22nd in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, July 19th to 22nd. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Steve Forbes. You're listening to The Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if your mind's blown today, imagine spending a week with George Gammon and Peter Schiff and Kenny McElroy and Jason Hartman and all kinds of cool people. You could do that on the 22nd Annual Investors Summit at Sea. It happens in the middle of June. We spend a couple of days in Fort Lauderdale, Florida, then get on a big, beautiful, brand new cruise ship where we'll head to Aruba, Curacao, and Bonaire. Join us. Send an email to summit@realestateguysradio.com or go to investorsummitatsea.com. We're talking with the Rebel Capitalist George Gammon, and before we get back to that conversation, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's real estate trivia question. It's just a regular trivia question that has something to do with real estate. When you think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. The first person that gets it right gets an awesome prize. It's the 20th anniversary edition of the classic Rich Dad, Poor Dad. Although George had started listening to the Real Estate Guys back in 2012, we actually met through our friend Robert Kiyosaki. You've probably already read Rich Dad, Poor Dad, but I bet someone in your life could use a copy. That's our prize today. Last week on the Real Estate Guys, we had attorney Mauricio Raul with us. His brand new book, Legal Strategies for Everyone, has just come out. We asked this. According to Fortune magazine, for the second year in a row, Texas has the most Fortune 500 companies. In fact, there are Fortune 500 companies in 49 U.S. states. Which state is not yet home to a Fortune 500 company? Well, the answer is the great state of Utah. Yeah, for some reason, there's just not yet a Fortune 500 company there yet, but I can't imagine that's going to last forever. Here's our real estate trivia question for this week. As you know, George spends most of his time in Medellin, Colombia. Here's what I want to know. Where did the name Colombia originate? Yeah, the name of the country, Colombia. Where'd that name come from? If you think you know, or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. The first person that gets it right gets the 20th anniversary edition of Rich Dad, Poor Dad by Robert Kiyosaki. That's today's real estate trivia question. We're with our good friend and very prolific content creator, George Gammon. Well, hey, George, you know our listening audience, mostly folks who are interested in real estate, own real estate, concerned about what's happening in real estate. And right now, it's an interesting time because listings are down, pricing is not clear. We have the inversion of the yield curves been sticking around for a while. I know you have some thoughts on this, especially when it concerns the volatility in the market.
Yeah.
What are your thoughts on the real estate market right now?
I just did a video that was about the US going into a volatility supercycle.
Yeah.
What I mean by that is there's a theory volatility cannot be decreased. It can only be pushed forward. But at some point in time, if you try to suppress volatility, when it does show up, it'll show up to an extreme if you're trying to suppress it, because volatility is natural to human beings.
Right.
It's natural to the planet we live on. It's just natural to the life we live. You can't get rid of volatility. So what we've done is artificially suppressed it for many years, possibly decades. So you have to look for a catalyst if you assume things will change. And again, if they do change and that volatility comes back, it's going to come back 10 times what we would have had if we would not have suppressed the volatility artificially to begin with. So I think one of the catalysts could be the fact that we're seeing what I'm calling the low float effect. What I mean by that, and real estate's a perfect example. As you pointed out, the inventories are almost at all-time lows. I pulled up a Fred chart the other day, and I don't know the exact metric they're using, but it was a proxy for the inventories, how many homes are for sale in the United States. And it showed that usually there's about 1.5 million.
Yeah.
In January of 2022, that number got down to 350,000. And now it's right back up to about 650,000. So it's still less than half of what it normally is.
Yep.
Most people would say, well, I got to be bullish on real estate because the inventory, or the float, if you will, is very, very low, the supply for sale, and therefore prices can only go one direction, and that's up.
Right.
But that's a wrong assumption.
Sure is.
Because what you have to understand is if prices are at an all-time low, that doesn't necessarily mean that demand is at an all-time high. In fact, demand can be at an all-time low, even though the price is high, if the supply or inventory has come down to a significant degree. So right now, if you've got price that's basically flatlining, maybe going up a little bit, maybe coming down a little bit, what that tells you is there's an equilibrium between supply and demand. So therefore, we don't even have to guess. We know definitively if supply is low and prices aren't skyrocketing, then demand is equally as low. The problem there is if you add just a little bit of supply, you're going to have a much more extreme price move than you otherwise would have had, assuming that we would have been at a natural rate of inventory at 1.5 million. If we take it to an extreme, I think the viewers can understand this concept a lot better. So we'll start with 1 million and say that prices have pretty much flatlined. That would tell you that there's 1 million homes for sale and the demand for homes right around 1 million.
Yep.
Okay. Now let's add 10 houses to the inventory. It's not going to move the needle too much, right? Because we've got demand at 1 million homes.
Yeah.
But now let's assume there are only 10 homes for sale. Again, we're just taking this to an extreme to understand the concept.
Yep.
And the price flatlines. That means there's demand for 10 homes. Well, if I add just five homes to that, I'm increasing the supply by 50%.
Yep.
So the price is not only going to drop, it's going to plummet. And the opposite is true. If I decrease the supply just by 5 units, if we're starting with 10, the price is going to rip higher. So you see, and this is a concept that's very well known in the stock market. And that's why I use the term the float, because that's the terminology they use.
Yeah.
But what's fascinating about the world we live in right now, Robert, is we're seeing the float decrease in almost every single asset class. Like I did a video on this the other day. We talked about real estate, how the supply there is incredibly low, but it's the same in Bitcoin, where the supply is getting lower and lower and lower because you have more and more people hodling or holding on to their Bitcoin and just not selling. And we're going into a halving where the rate of supply coming onto the market is going to continue to decrease. You say, oh, George, well, those markets really don't pertain to me. Okay, fine. How about the stock market? When we look at the outstanding shares in the S&P 500, we are at a point right now, almost at a low point, going all the way back prior to the GFC. Why? Because what happened after the GFC is all these mega corporations found that they could get super, super, super cheap loans from these banks. And the banks didn't want to lend into the real economy because why would they? Because they know the real economy isn't going to get bailed out, but they know the financial economy is.
Yep.
How do they know? Look at what they did during 2008.
Right.
That's the proof's in the pudding. So they look at their risk reward, the banksters, and they realize that it's a far better play. It's a no-brainer to lend into the financial economy. So if you're lending to these mega corporations that are quote unquote too big to fail, and you're giving them very, very cheap money, then what these mega corporations are doing is saying, hey, look, it benefits me to have the stock price go up. And I can't really do that, or I don't want to do that by working hard, because that would take too much risk. And who wants to work hard? So all I'll do is just borrow from Jamie Dimon, buy all my shares back, and artificially increase the price without having to do anything to the bottom or the top line. And this is the exact same dynamic. This is the dynamic we have seen throughout the entire S&P 500 going back to the GFC. And it's just gotten more and more and more and more extreme, just like the housing market. So you have all of these major asset classes where the supply that's available to transact or to trade hands is incredibly low. And you're right. If you do increase the demand just slightly, you're going to see a big move in the price, just like what we've seen with Bitcoin recently. With, yes, it's gone up to 70,000, but the price swings have been unbelievable. When you could look at it one moment and it's down 10% for the day, and you look at it after lunch 2 hours later and it's up 20% for the day. It's going back and forth and back and forth. And then we look at home prices. I mean, you know this better than anybody. Home prices last year, nominal terms, were up by, let's just say 5%, right around there. Yep. But this year so far, they're down in the first few months. And we'll have to see if that trend continues. So we're not seeing Bitcoin volatility in the housing market, but relatively speaking, I think the volatility is going to be much, much, much higher than people are accustomed to, not only in real estate, but in the stock market and in gold. That's another thing that I analyzed, that we see the exact same dynamic playing out with physical gold. And therefore, moving forward, for people to not only survive, but thrive, I think they can't just sit back and say, well, what asset class should I own? They also have to consider the volatility. And that's more of a shift in mindset over anything else. Because unfortunately, as emotional creatures, most retail investors get whipsawed out of the market. They buy at the wrong time, they sell at the wrong time, because just this roller coaster ride, they can't handle it. And so I think that's what we're up against, definitely in the next few years.
Well, and I think the average investor probably does not understand volatility because, and to some degree, it has been suppressed. And because when something does happen, like the GFC, well, there's all these reasons and all this drama and all the folks, all the talking heads that have their explanations for it. But as you pointed out recently on the video discussing this, volatility works both ways, right? Like the 5 houses either being taken away or added to the 10 house supply. Volatility can drive things up like it has, Bitcoin, and down like it has Bitcoin. Bitcoin's a great example because as a newer asset, it naturally has higher volatility. But compare that to gold, which has been around for thousands of years. We have seen all-time highs very recently in gold, but the volatility there doesn't feel the same as it does in the cryptocurrency.
Yeah, but relative to the volatility you typically see in gold. That's what I'm talking about. Again, I want to be very clear. I am not saying you're going to see Bitcoin type of volatility in the real estate market.
Right.
That's not going to happen. But you're going to see more volatility than you typically see, especially going back, let's say, the last 10 years. And it would be the same for gold. It would be the same for the stock market. And that's something that people really need to prepare for.
Well, let's talk about that side of it, because it's one thing to know where we've been. It's another thing to guess where we're going. And the reason we like to learn from as many people as possible is to get every advantage that we can. But an investor today has to be a little more protective, maybe playing defense more than offense. Is that fair?
Yeah, and you have to focus more on portfolio management. So I'm a huge fan of reading books that were written by all these guys and gals that were investors, traders, whatever you want to call them, in the 1970s, 80s, 90s. And some of them are still with us today and giving us all their incredible wisdom, knowledge, experience, etc. You see that all the greats, regardless of their strategy, had certain things in common, certain rules they lived by. And I think people are going to have to focus on those rules that made active investors so good back during those time frames. The whole passive type of mentality, I think, is what people are going to need to be very, very careful of. Now, maybe not in real estate. Real estate might be a little bit different there, but especially in people's 401ks or even gold, if you're a type of gold investor that is trying to buy gold for capital gains and not just an insurance policy to hold for the rest of my life and give to my kids to protect my purchasing power. One of the main rules that you had for all of these guys and gals, these legends in the 70s, 80s, 90s, they would say the trend is your friend. They would say you've got to cut your losers quickly. You got to ride your winners. But most importantly, if you can't sleep at night, you've got to reduce your position size.
Yeah.
And I think that's something that we can all learn from. So if you are, let's say you're buying a home right now, or if you got a portfolio of 10, 15 properties, if you can't sleep at night, you might want to trim a little off there and go into cash or go into T-bills or go into gold, right? And I think that's the main lesson that we can learn as it pertains to real estate and as it pertains to whatever type of investing we're doing over the next few years.
Now, George, in addition to the whiteboard videos, which are a ton of fun, it seems like a few times a day we get an update from Rebel Capitalist, your awesome channel, and you attack headlines and dig into that stuff. You have awesome interviews. All that culminates once a year when you invite some of your smartest friends to your live event, Rebel Capitalist Live. Had the pleasure to be at that multiple times, and it is like no other conference. It's coming up at the end of May. Tell us about Rebel Capitalist Live.
It's going to be incredible. This is going to be the best one. You're there all the time. You're usually the MC. Hopefully, we're going to be able to have you speak a little bit on the goals, the personal goals, which is just mind-blowing for anyone who hasn't done those types of, what would you call them, Robert? In-depth personal explorations?
Definitely so. I was honored to have you at the Goals Retreat this year, my friend.
Yeah. So in fact, when we were there, I was so blown away. I came right up to you after the first session and said, Robert, is there any way that you can incorporate something like this into Rebel Capitalist Live? And you said, yeah, I'd love to. So we're going to have that, but we're going to talk a lot of macro. We've got Mike Green there, who's one of the smartest guys I've ever met in my life.
Yep.
Jeff Snyder, who's been to quite a few of them, the master of the Eurodollar market. But we're also going to have some real estate guys there, like Jason Hartman, like our good friend Kenny McElroy. A lot of stuff going on right now with commercial real estate. And I know that's something where Kenny's definitely going to do a deep dive. And then in the Bitcoin space, that's our good friend Mark Moss is going to be there. And Joseph Wang is going to be there from the Federal Reserve. So he's going to be able to give us some incredible insights as well. And then on the freedom and liberty side, we've got my good friend Robert Barnes, who I guess infamously has represented Alex Jones in many of his, we'll say, adventures. But most people don't know that Robert is also an expert on Plan B stuff. And I think right now, we talk about the volatility in asset classes. I think we're unfortunately going to have a lot of social and geopolitical volatility as well. That might be the most important thing we discuss at Rebel Capitalist Live. It's to how to make sure that you maintain your freedom and personal liberty, not just increase the size of your portfolio. And then we've got Rich Cooper there. It's going to be talking about men's issues and a lot of red pill stuff. So basically what it is it's all the stuff that I'm interested in and all the people that I like talking to. I just invite them to Orlando once a year and have them do presentations, and we have cocktail parties where you can rub elbows with all the speakers and you can meet your fellow Rebel Capitalists, you can network, and just gain all the knowledge and the motivation that you need to make sure that you're able to handle whatever comes our way throughout the rest of 2024.
It's going to be extraordinary. It takes place in beautiful Orlando, Florida on the 31st of May and then the 1st and 2nd of June. You can get all the details and get your tickets at rebelcapitalistlive.com. And George, while we're on that topic, we've also had you as an awesome faculty member on our Investor Summits. The only ones you've been to are the Investor Summit at Sand events we've done in Belize, but we're getting back on a cruise ship in the near future for our Summit at Sea. And maybe just share with us kind of your takeaways from the event and why you keep showing up.
It's one of the most well-run events I've ever seen in my life. It's not only jam-packed with information and incredible intel from amazing thought leaders in real estate and sound money and economics, but it's also I think the social event of the year. And most people think that they're just coming to a conference, but my goodness gracious, every single meal, every single breakfast, lunch, and especially the dinners are just incredibly entertaining, and you're there hanging out and doing costume parties and the talent shows and with all these people that have a similar worldview that are all about freedom and liberty and free market capitalism. And it's just an amazing event that I really look forward to every single year.
All right, man. We appreciate those kind words, and we sure appreciate your time today. You can follow George on all of your favorite podcast platforms. When you listen to the podcast, like I do a lot, what you're basically getting is the audio version. And if you're into video, well, then check out both the Rebel Capitalist channel and the George Gammon channel. George, it's been great to hear from you, and we'll see you very soon, my friend.
Thanks a lot, Robert. It's always a pleasure to talk.
There's the Rebel Capitalist George Gammon. I learn something every time I talk to George. I'll have a few thoughts next, plus a market spotlight. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the Rebel Capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, this is Garrett Sutton, Rich Dad's advisor. Remember, equity happens, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you've thought about investing offshore and maybe after today's conversation you're a little bit uncertain about that, well, join me in one of the coolest offshore markets I've been to. Coming up in July, it's our Belize Discovery Trip. You'll spend 4 days and 3 nights in beautiful Belize. We'll hang out. I'll show you the market. We'll have amazing food and great conversation. You can get all the details on the website at realestateguysradio.com under the tab that says Events, where you'll find the Belize Discovery Trip. Well, my goodness, always great to hear from George Gammon. He's just got a sensible way of explaining things. And I'll tell you what, being a guy who's retired, he spends all day doing it. He really has a thirst for knowledge. So a couple places you can find George. He's got an awesome channel called Rebel Capitalist. And there are days when he puts out 2 or 3 or 4 different posts. He repurposes those as podcasts. So you can find the Rebel Capitalist podcast at all your favorite podcast outlets. And then the George Gammon channel. That's where you'll find those whiteboard videos. And what I appreciate about George is his down-to-earth style. When I first met him, I was just blown away at how much he knows. And then when I got to know him and figured out that, hey, he was just searching for this stuff and is completely self-taught, that's super impressive. We get the awesome opportunity to hang out with some world-class thinkers and notable economists. In fact, next week on this show, one of the top 20 living economists will be with us. But it's refreshing to me that you don't have to have a big degree and a pedigree and dozens of years teaching to really grasp this stuff. And of course, the other thing I appreciate about George is, as you learned today, he's a real estate investor. Now, he's told some of that story on our show before, but really went into some detail here and just some great nuggets when it comes to offshore investing and how you approach your portfolio. So I cannot wait to hang out with George and his super smart friends at Rebel Capitalist Live coming up at the end of May in Orlando, Florida. Then we'll head out to Fort Lauderdale a couple weeks later for the 22nd Annual Investors Summit at Sea. My brain always expands, as does my waistline on those trips. Hey, before we get out of here, let's find out what's happening in a particular part of the real estate world with our Market Spotlight. Well, it is time this week for our new feature. We call it Market Spotlight, where we take a look at what's happening in real estate markets around the globe. And this week, we're going to talk about a really interesting market. First, let me introduce our good friend from the Peak Group, Steve Olsen. Hey, Steve.
Good to see you, sir.
It's always a pleasure. It was great to have you at our syndication event. You're in a lot of markets, but today we're going to talk about a really interesting market, and that's Birmingham, Alabama. Give us the big picture on Birmingham.
Yeah, so a few years back, we had been working with a real estate investment trust, took some institutional capital. They said, we like this Birmingham market. Let's go buy a builder there. Fast forward to today, not working with the REIT anymore, but still own the builder. And so have a lot of opportunity for good build-to-rent brand new product in the Birmingham, Alabama metro. We love it there. It's very landlord friendly with very low expense ratios.
Yeah, and let's talk about the drivers. Who are the tenants in these types of properties? Who lives in Birmingham, and what does that all look like?
Well, you get all kinds, of course, but we're primarily focusing on those suburbs that are kind of growing and moving out of Birmingham, going on Interstate 59, that connects over to Chattanooga, Tennessee, and then the 20 goes out towards Atlanta, right? So we like to work those corridors. There's a lot of manufacturing, a lot of logistical, professional services kinds of jobs in those areas, and you're predominantly getting into the counties that surround the core of Jefferson County. You're getting into those outlying counties. For example, Robert, the Honda plant is located out in that direction. They manufacture most of the Hondas for North America. So you can imagine how busy that is and all the other businesses that are tied to that kind of manufacturing.
Hey, Steve, one of the things we look at, of course, is tenant landlord law, which varies a lot depending on the state that your property resides in. What is the tenant landlord law like in Alabama?
Well, that stuff's written a lot at the state level, but it's the local judges that enforce it, right? When we're talking about landlord law, can I evict somebody that's not paying me rent, right? Let's get right to it. That's what you're wondering about. And so if you're in the Birmingham core, you can be like a lot of these metros like Atlanta or even Dallas. You get in the core, they're going to interpret it more towards tenants a lot of times. When you get into those outlying suburbs, it's a lot more landlord friendly, which is, generally that's how the state writes it. But the locals can bend it a little bit here and there.
Yeah, absolutely. It is very different in different places. We talked about some of the drivers in employment. What about cost of living in Birmingham? How does that compare to some of these neighboring areas?
So low. You have low insurance costs, especially when you compare it to the Gulf, which is not that far away, but far enough to where, you're going to get better insurance savings. And then low property taxes. I'd encourage the listeners to look it up. some of the lowest property taxes in the entire country.
Yeah, no kidding. And then, of course, you always are looking at what the rents are and how that compares to the pricing. But folks are listening from all over the world, so they probably have no idea. What would a typical single-family house, what's the range there for something investors might be interested in Birmingham?
A big range, right? In the urban core, it's different. We're in the suburbs. If you look up the projects we build, you're going to see D.R. Horton nearby. You're going to see the national home builders nearby. So that gives you a feel for the areas that we're in. And I would say on a smaller floor plan, new construction, you're probably 1,600-ish. And then you could get up as high as $2,000, just depending on your square footage. So anywhere in that range, depending on a couple of factors.
And those are the kind of tenants that are going to stay longer and typically gravitate towards these outlying neighborhoods and so forth. What does average length of tenancy look like?
Well, you're going to be a couple of years, right? We're not doing attached townhome or stacked product. These are homes on larger lots. You want a yard for your kids to be able to run around in. You work out in the suburbs or these outlying businesses, and that's the vibe that you're looking for. And, in the economy in general, we've seen what's been happening to the 10-year and rates, and I think we're creating more tenants by the day out there, but they want that white picket fence experience, which we can give them with this kind of product in these neighborhoods.
Quality of life, pretty low prices, and the cost of living is favorable. That sounds like it all wraps up into a good market. Hey, Steve, before we get out of here, last week on Market Spotlight, we talked about another market that you know well, and that's Dallas, Texas. And it turns out that May 9th and 10th, you guys are doing a property tour in Dallas. I'm going to be there. I'm going to bring my 19-year-old son. He's anxious to learn about the Dallas market. Tell us about the tour.
Yeah, we love that market, and I know you do too. Dallas is one of the biggest metros. I read last night it's going to pass Chicago for the third largest metro in the country, probably sometime in the early 2030s, so in 6-ish years from now. And so we want to show everybody. That's where our home office is in Hurst, Texas. So at the Hurst Conference Center, it's attached to a Hilton. We're going to have some investors in town, limiting it to 50 people. We'll do a little meet and greet on May 9th, have dinner, introduce you to the team, chat for a little while the next morning on the 10th, and then go hit the road. We're going to go see some brand new built fourplexes, some new homes, some dirt that we have under contract for future new construction, because that's what we do. We do brand new construction. That's our game. So give everybody a chance to go do that. Then we'll drop you off for dinner. You can head home in time for Mother's Day.
All right. Well, if you're interested in that, all you have to do is send an email to DallasTour@realestateguysradio.com, DallasTour@realestateguysradio.com. You can join Steve and his team. Join me, and my son Ethan is going to be there. I think he's going to bring some of his friends as well. He's just bought his first house, and he wants to buy more. So it sounds like a great way to see the market in a short period of time. Steve, it's been great having you on the program for Market Spotlight. Thanks for being here today.
Thanks for having me.
There's our friend Steve Olsen from The Peak. There you have it. Market Spotlight, Birmingham, Alabama. Good stuff. It is a big, bright, beautiful world, and wherever you decide to invest, make sure you continue to study. If you'll pay attention to some of the macro stuff, you will be in a much better position and a little bit ahead of the rest of the crowd. Hey, coming up, we have some super awesome guests. I am excited about the shows coming your way. Next week, a gentleman that's been writing the same newsletter for more than 40 years, and he gets a bunch of stuff right. Dr. Mark Skousen will be with us. Can't wait to pick his big brain. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.